Welcome back. Markets are rallying in early trade in a pretty big way. Has a bottom been reached in this market turmoil? Let's talk to Greg Taylor. He's Chief Investment Officer at Purpose Investments for a conversation on just that. Greg, thanks a lot for joining us. I know you've been looking for signs of a bottom in these markets. What would signs of a bottoming look like?
Well, it feels like we got a little bit of those signs on Friday and Monday. And really what you want to see is signs of capitulation. And we definitely got that in spades on Friday with one of the worst days we've seen in a while. And everything going down at once. This correlations went to one. And I think anyone that traded through the global financial crisis was having PTSD Sunday night as the futures market opened. Then we saw those futures gap down in a big way. But it is healthy to see just signs of a reversal that we got yesterday during the day, because we had that big down open. We had the VIX spike over 60, and then slowly throughout the day, buying came back in. Headlines were still going out there, and markets weren't buying them and not paying attention to them. And I think that's kind of the sign that the sellers are done, the sentiment's washed out, and you're starting to see people come back to the market and say, maybe we got a little too crazy with some moves here and got carried away, and now we're resetting. And it's good to see a bounce today. We'll just see how long this lasts, and but I just feel like we're in choppiness for a while.
But the fundamental news that has, I was going to say concerned investors, that really has alarmed investors hasn't gone away. And that's the trade policy of the United States, with tariffs being dialed up in a big way against dozens of countries around the world, including the biggest trading partners of the United States. All of this leads to fears of a global economic slowdown. That hasn't gone away. So how should we consider, how should we revisit the question of a market bottom when the source of the worry is still around?
Yeah, you're 100% right. And that's the concern, because we're heading into an earnings season, which is going to be one of the most uncertain earnings season that I think we've had in a while. And this is going to be the big thing holding back the markets, because when you talk to management teams, they don't really know what to say. With the tariffs in place, they don't know how long they're going to be there, whether they're actually ever going to be implemented. And if they are, just what the effect is on their business model. So when markets hate uncertainty is one of the classic rules, and we've got a lot of uncertainty out there. And I don't think much of that's going to be cleared up through earnings season, as it's going to be incredibly hard for companies to give guidance. Now, the good thing versus the global financial crisis is a lot of this can be just revised with a pen or a tweet. And we can see something that comes out that just reverses this, and we try and get back to whatever the new normal is. And that would add a degree of certainty back. But right now, we've had such a quick sell-off. The markets were overbought heading into the year. That is no longer the case. We've given up a lot of those early gains. And I think now it's just trying to be more of a stock picker's market and try and figure out which companies you're going to get most comfortable with the soonest.
We had a conversation with an earlier guest this morning about sectors of the equity market that have substantially outperformed the broader markets. Things like Canadian utilities. A Canadian utilities ETF was in focus. Consumer staple stocks like the Canadian grocery stocks. What would you expect those sectors to do if a bottom is forming?
Well, those are the classic defensive stocks. So what you'll see is that they will have outperformed on the leg down. So they're not going to have as much downside capture as some of the other growth stocks. But if we do get a more certainty and some headline that comes out that reverses sentiment, what's going to lead that is more the high beta stocks that have really been punished. So that's going to be your semis. Semis always lead, and it was interesting to see names like NVIDIA and Micron yesterday be the first to go green on the screen. And then I think the other area just to watch is the banks. The U.S. banks are really tied to the economy, as we all know. Names like JP Morgan and Goldman Sachs have been down heavily in the last few months, but we do start to get some sense of earnings from them. JP Morgan kicks off earnings season reporting on Friday, so maybe if there's any sliver of guidance and positive notes they can give, that'll help. But I'd look for the semis to lead, and then the banks to follow after that, and then for Canadians, just watch those copper stocks. Last week we started to get some more recession fears priced from the market. Copper is one of the first commodities to pick up on those, and they definitely saw the stocks hit. But if we see these recession fears start to fade away, copper could be a nice rebound candidate as well.
And the copper stocks are rebounding very substantially this morning. You would not call this a judgment by the market that recession fears have faded. I assume you would call this just a bounce off the declines of earlier in this earlier in the week and last week.
Yeah, I think you're always going to start with a bit of an oversold rally and then see what we can build off of that. At the end of the day, the picture for these, the backstory for these material stocks is still incredibly impressive, as there's really not a lot of new assets coming out there. And that's something we've talked about for the last few years. And those early days of the AI hype, just looking back a year ago, everyone's starting to look at copper stocks as a play on the energy demand and building out these data centers. So that theme is still out there. They may have gotten a little ahead of themselves with that, but we've had a pretty good reset. They pulled back a long way, and this could be something that you can look at for more of a multi-year move once we get off this oversold level.